Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, October 17th, 2018, and here are some of today's trends in the news. On the market front, and what a front it is. Remember that front yesterday? Yeah, that Dow that went up almost 550 points. NASDAQ up. And what did we say? I said, watch what happens, how the markets open in Asia tomorrow. Well, tomorrow's today. And what happened over there in Asia? Well, Nikkei went up a bit. Shanghai just about flat. Hang Seng too, both level. And remember what's going on with that Shanghai market. It's only down about 27% from now until January 18th. Could you imagine if the U.S. markets from January to now in 10 months were down 27%? There'd be panic on the street. Hey, what happened over there in Europe? Oh, the markets must have went up on the good news of that strong Dow. Nope, didn't happen. They went down. Here in the States, Dow opened down over 150 points, went down as much as 300. Bounced back, went in positive territory, closed down over 90. NASDAQ down, oil down, gold down, Bitcoin down. So, what happened? Dow falls in volatile session after Fed hints at more rate hikes ahead. No kidding. How long have we been saying this? Well over a year. What does it mean? You know what it means. It's in your trend alert. Your trend alert. Market bounce back, a fleeting fad. That's what we said. And we warned just about a month ago today to watch out for an economic 9/11. The major averages closed well off their session lows. According to the minutes from the Fed September meeting, the central bank remains convinced it needs to tighten monetary policy to keep the economy steady. Yeah, we make the point. Earnings are fine. They're good. But we got some real problems here. The world cannot take more expensive money. And that's what we're looking at here. So what a difference a day makes, huh? And happy days aren't here again. We got trouble ahead. How about those earnings? Boy, they're coming in pretty good, aren't they? Yep, they expect about 19% increase in third quarter earnings for the major corporations. And that's going to boost the market somewhat. But the juice is running out. And you know what the juice is. It's that heroin. Yeah, called zero and low interest rate policy and negative interest rates and quantitative easing. The more they try to make the markets kick the habit, the more volatile they get. And gold. Again, gold barely moved today. It has to do with interest rates. But again, we believe gold has reached its bottom at 1,200, hit 1185, right in that range, because there's going to be a lot more volatility. And oil prices, very important. They fell today because one of the reasons U.S. crude stocks rose 6.5 million barrels last week, the fourth straight weekly build as exports were down 1.8 million barrels per day. Inventories rose sharply even as U.S. crude production slipped 300,000 barrels per day to 10.9 billion last week. Well, they had that problem over there with the Gulf and the hurricanes. But we believe oil prices are going down despite the sanctions, the embargo that's going to hit Iran on November 5th because there's a global slowdown. It's a supply and demand issue. What will drive up the prices of oil is destabilization in the Middle East. Remember, I read to you yesterday, U.S. growth nears turning point as tighter policy kicks in, warns Bridgewater chief. The U.S. economy faces a looming deceleration as tighter monetary policy starts to weigh on activity and ratchets up pressure on financial markets, according to the world's biggest hedge fund. They manage $160 billion in assets. The world's biggest hedge fund saying this. Well, today, listen to this from BlackRock feels investors' anxiety as inflows plunge to two-year low. Blow for biggest fund manager. BlackRock, the world's biggest asset manager, said inflows into its funds sank to a two-year low in the third quarter, highlighting the rising tide of investor anxiety that has driven this month's market turbulence. Quote, right now there are many new questions in many new areas of the world, such as, are we at peak earnings, said Larry Fink, BlackRock's chief executive and chairman. This led to, quote, a pause by investors looking to de-risk. The group saw long-term net inflows of just $10.6 billion for the third quarter. As recently as the second quarter of 2017, BlackRock reported inflows of $94 billion. BlackRock's total assets under management reached $6.4 trillion. BlackRock, Bridgewater, the tops in their fields, but behind the top trend forecaster in his field, who said this was going to happen. You have the facts. They're in your trend alerts. And again, not gloom and doomers. I was the first to call the Trump rally, the first to call the correction, and the first to call what they're saying now over a month ago. Economic 9/11. China's building boom sets region on course for potential $6 trillion debt iceberg. Local governments may have accrued debt pile burden that they've been hiding as high as $6 trillion following rampant growth in borrowing, the rating agency estimated. Homeowners in China staged protests over falling prices. In Shanghai and other large cities took to the streets to demand refunds on their homes after property developers cut prices on new properties to stimulate sales. Old news, we've been reporting this weeks ago. Copper, Dr. Copper. That's right, it's the indicator used in high-tech to old industrial. And who uses most of it? China. They buy over 50% of it a year. Copper prices inched lower for the third consecutive session. It's 4 now. Wobbling as worries about weaker Chinese economy continue to hang over the markets. I mentioned the Shanghai Index. I'm talking about housing. Read your trend alert. Infrastructure investment, factories, car sales, one after another, down. New York Mercantile Exchange prices in copper have fallen 16% from their 4-year high in June. Data Tuesday showed inflation in China hit a 7-month high in September, and figures show a 49% year-over-year drop in home sales in China's 10 major cities during this year's Golden Week, typically a time for big ticket purchases. On top of that, car sales fell in September for the third straight month. Again, we reported this. The first annual drop in passenger car sales in almost 30 years. Infrastructure investment down to 1992 levels. This is the second biggest economy in the world, and it doesn't look good. Worries about slower growth in the country, which consumes about half the world's copper and similar proportion of other industrial materials. How long will this go on in China? Huh? We believe a pretty long time, being their debt to GDP ratio is around 300, plus over $30 trillion in debt. Dollar rally has momentum. Buoyed by strong U.S. economy, the Federal Reserve's rate increases, and lackluster growth elsewhere, the dollar has rediscovered its momentum over the past 6 months. And analysts believe that the rally has further to run for now. According to Fed Fund futures, this is important, which are contracts investors use to bet on interest rates. The implied odds of 3 rate increases or more in 2019 is only 25%. In fact, almost 40% believe the Fed will only lift rates once more next year or stay pat entirely. Very important. Trump is in charge. He picks the Fed chair. U.S. Secretary of the Treasury could fire him. Trump doesn't want rates to go up. He's made it 100% clear. Fed's gone crazy, going loco, one after another. He's in the real estate business. Weekly mortgage applications tank 7.1% as interest rates surge to a near 8-year high. Applications to finance a home loan, which are highly sensitive to even the smallest rate moves, fell 9% for the week and were 33.5% lower than a year ago. U.S. housing construction fell in September, continuing weak streak. Building declined 5.3% in September from the prior month. Australian housing markets in a slump. The median home price has fallen 4.4% this year in Sydney, 4.6% in Melbourne. Auction clearances have dropped to barely 50%. The number of unsold properties on the market has soared to nearly 20% in Sydney and almost 19% in Melbourne. The world cannot take higher interest rates. If they raise interest rates and the markets went down today because the Fed says they're going to stay on track, this market is going down. Not only in the United States, worldwide. Because the higher the rates go, the weaker these other currencies fall. But maybe there'll be a time to play that trump card. And the trump card, hey, it's the presidential reality show. The trump card to Fed Chair Powell is, you're fired. This is Gerald Celente, and that's some of today's trends in the news.